Erica Vincelli, mortgage agent. Mortgages are complicated, and it's my job to make them less complicated. So, in 2 minutes or less, I want to share tips, tricks, and strategies that will help you win the game of real estate. Today, I want to talk to you about how equity or alternative lending saves the day. Now, alternative or equity lending is also known as B lending, but I like to call it alternative or equity lending because it just sounds a lot nicer. And the reason that this is such a great solution is because when banks or credit unions or traditional lending guidelines, if you don't fit in those guidelines, then the banks are going to decline you. So alternative or equity lending has a much more logical approach to lending. So for example, I had a self-employed borrower who does not declare a lot of money every year on their taxes for obvious reasons. And their accountant is doing a great job of keeping more money in my client's pocket than the government's. However, when it comes to lending, that can hurt you. So what we did is we looked at an alternative lender who actually looked at the revenue of the business to help qualify for their mortgage, whereas a traditional lender would never do that. You have to use your income that you declare. Another really great example of alternative solution saving the day was for a client who went through a consumer proposal. Now, they went through a consumer proposal. The reasons are kind of irrelevant, but what happens is that they had enough equity to actually pay out the creditors or the consumer proposal with the equity of their house. So they finished their consumer proposal, and then what we did was we did a refinance right afterwards, where they were able to take the equity and pay off the consumer proposal. And where that's beneficial is that with a traditional lender, usually you have to wait 2 years from the date of discharge to even consider reapplying, and then there's still a whole bunch of criteria that you have to meet. But this person was able to do it right away and start rebuilding their credit immediately. And the third client that I had that has a great solution with equity lending was somebody who just did not qualify under the regular debt to income ratios. Usually there's a certain percentage of your income that has to cover all of your debts, and they exceeded theirs. And so what the lender was able to do was look at a higher debt servicing ratio mortgage that allowed my client to be approved for the mortgage. So it helps a lot of people. And so if you feel that you've been either declined by a bank or you're wondering where you fit within the lending options, feel free to push the big red easy button below and book a 15-minute no obligation call so that we can figure out what best solutions fit for you. Erica Vincelli, talk to you soon.